Hi, John. Thank you very much for joining us today. How are things in Toronto?
Wonderful. Pleasure to be here.
John, Alamos Gold has had many achievements this year, including moving forward with the Phase 3 expansion at Island Gold. And I want to examine that expansion in details and what it means for Alamos. But before we do that, why don't we just start with a brief overview of Alamos Gold for those viewers who might not be familiar with the company, just touching on how many producing mines you have and what your annual production is.
So Alamos produces from 3 mines, 2 located in Canada, the Young-Davidson Mine and the Island Gold Mine, and a third, the Mulatos Mine, which is located in Sonora State, Mexico. Collectively, those mines are producing 460,000 ounces for 2022 at all-in sustaining costs of $1,200 an ounce. But when you factor in our growth, which incorporates the Island Gold Phase 3 expansion and the addition of our Lynn Lake project in northern Manitoba, that will take our production up to 800,000 ounces a year by 2028, and our costs will be roughly $1,000 all-in sustaining cost. So that is sort of where we are and effectively where we're headed.
And John, before we dive into your various operations, Alamos Gold has been a rather strong performer, no performer in a rather challenging year. Maybe you could just touch on why that is.
I think it's a combination of things as usual, but primarily we've had some very interesting developments over the course of 2022. In the spring, of course, we announced the Phase 3 study, which was very well received by the market. I think the capital cost is about right. The return on investment is very strong, and the fact that we've turned what looked like a relatively small and significant asset when we acquired it, we've turned it into a really first class operation, and the Phase 3 study envisions it becoming one of the best gold mines in the world. It'll be able to produce 285 to 300,000 ounces a year for 17 years at cash costs under $600 all-in sustaining costs. So that's a remarkably productive, remarkably profitable mine. We also had a big challenge in that we started construction on our La Yaqui Grande deposit. It's part of the Mulatos complex in Mexico. And we only started production on that, construction on that operation after COVID had hit. So it was sort of spring of 20. And it's very challenging under any circumstance to build a gold mine, but to build one with a backdrop of a pandemic and so forth. And of course, inflation started to creep in towards the latter end of the construction. So there was every opportunity for things to go wrong, let's put it that way. But in fact, we built the mine on time and on budget. It started producing in June of this year. It's going to be a great operation for us, really transformational for what's going on down at Mulatos. The fact that that came in so successfully, I think, was very encouraging for the market. So those were probably the 2 most significant catalysts in terms of putting us in a position to outperform this year.
John, I want to move on now and discuss your operations in more detail. A primary driver to future growth at Alamos is the Phase 3 expansion at Island Gold. And once complete, it will effectively double your production at Island Gold. Can you just provide a brief overview of Island Gold operation and how things are progressing with the expansion?
Indeed. First and foremost, this has been driven by exploration, and we've just had tremendous success on that front. When we initially looked at a Phase 3 expansion, we were sitting with roughly 3.7 million ounces of gold. And a year later, a little more than a year later, we were sitting with 5.1 million ounces of gold, and that was net of depletion. We've mined about 600,000 ounces or so from Island Gold since 2017. So net of that depletion, there's been a pretty substantial expansion. And as we've expanded it, the grade has been increasing. And the most recent blocks that we defined last year, we had over 1 million ounces come in at 15.5 grams. the lower east portion of the mine. That's an extraordinary development for us, and that gave us the wherewithal to take a second look at the expansion and see if we couldn't make it a little better than what we originally envisioned, which was a 2,000 ton per day operation producing around 240,000 ounces a year. So we bumped it up a little more, and with those good grades, a little bump in throughput brings a lot of additional production. So going from 2,000 to 2,400 tons a day essentially pushed the mine up to 285,000 ounces a year. Of course, there'll be quite a few years where we actually hit 300,000 ounces with the higher grades. So that's just in anybody's estimation. That's a world-class deposit, especially given the fact that it has a 17-year production horizon based on what we know today, and we fully expect it's going to grow quite a bit bigger yet. So, you know, you have to give credit to the exploration side of the company, and that's where things start. Going forward, though, the fact that we can look forward to a substantial portion of the company's production coming in at under $600 all-in sustaining costs, that's going to be a big boost for us. It's going to turn us into literally one of the lowest cost producers in the space, and the fact that that low cost production is coming out of Canada, I think that gives Canadians a lot of pride. I frankly think it gives our investors a lot of comfort, knowing that we've got this very secure, long life, low cost production coming out of Island Gold. As good as Young-Davidson is and will continue to be, it will ultimately be eclipsed by Island Gold. Island Gold is a very valuable asset. It's going to be the 7th largest gold mine in Canada with respect to production. It's going to be one of the lowest cost, if not the lowest cost mine, and ultimately one of the most profitable gold mines in the world.
That's a great overview of Island Gold. Let's move on now. Your second mine, which is also based in Ontario, Canada, is the Young-Davidson mine. It has a very storied history. Can you just provide a brief overview of the Young-Davidson mine, once again touching on annual production and your all-in sustaining cost?
You know, that mine is a little bit of an unsung hero because it did produce from the 1930s to the late 1950s, and it was one of the few examples of bulk underground mining anywhere in the world during those years of operation. It's never been a high-grade mine, but it's always benefited from the fact that the stopes were very large, and you were able to essentially skate on side with economies of scale. But for this era of its operation, we've taken it up well beyond anything that it ever saw in the past. So when we acquired it, we completed a merger of equals between ourselves and Rico Gold at the time. It was operating at roughly 3,800 tons a day, and it was operating from the mid-level of the mine. So what remained to be done was that all the lower mine development and the installation of the permanent infrastructure at the 1,500 meter level, and we had to sink the shaft, both the primary shaft, which we call the Northgate shaft, and the secondary shaft called the MCM shaft. They both had to be pushed down from roughly 750 meters all the way down to the 1,500 meter level. So that was a tall task in front of us, and we managed to complete everything by 2020. And since that time, the mine has been operating at 8,000 tons a day. So now we really have the economies of scale working in our favor. And the reason why we can operate a gold mine at 8,000 tons a day is because the stopes are just enormous. I mean, a typical high-grade stope would be something like the size of a big bank's boardroom, something like that. The stopes at the Young-Davidson mine are about the height of a 12-story building, and they're about 25 meters wide and 50 meters deep. These stopes are enormous. So this allows us to mine the deposit at such a high rate, and given that throughput, we can make the most out of 2.4 grams. And as it is last year, Young-Davidson yielded over 100 million in free cash flow. And that's what it's capable of doing. It has basically a 14-year reserve, and with reserves and resources, we can see our way for producing for another 20 years. And I'm pretty confident it's going to go well beyond that. We've been doing further drilling, testing the future expansion of the mine, and clearly it's well mineralized, quite a bit below the current levels. So that's going to be a very profitable mine for the company, and very interesting. Long after virtually all the executives that run the company today, long after they're retired, it's still going to be a profitable mine. So,
John, your third producing mine, which was also your first producing mine at Alamos, is the Mulatos Mine, which is located in Mexico. Can you talk a little bit about Mulatos and also how the ramp up is going at La Yaqui Grande?
well, that's we refer to Mulatos as Mulatos all the time, but in fact, Mulatos has been a whole series of mines, some of which were call it gently outlined by placer domes. So we had to sort of follow a paint by numbers kit to delineate reserves outside of the main Mulatos pit. And we were successful in doing so. We initially started that mine in 2005 with a 7-year production horizon. The main pit, 16 years later, is still producing. In addition to that, though, we've developed and mined out pits at San Carlos area, the El Victor area, the Cerro Pelon area, the first La Yaqui, and now we found grassroots discovery. We found La Yaqui Grande, and we permitted it and built it over the last couple of years, and now it's in production, and it's got about a 5-year horizon out in front of it. Over and above that, over the last year, we've been delineating a high grade ore body. Remarkably, it's located just adjacent to the main Mulatos pit. Who would have ever known? It was just sitting a little deeper than the open pit reserves that we've been producing from. But so far, we've delineated about 500,000 ounces, grading around 5.5 grams. We continue to drill it, and it continues to get bigger. So it looks like we've got another follow-up act once we've mined out La Yaqui Grande, and it looks like we're going to keep Mulatos producing for a long time to come. It's certainly been, the gift that kept on giving. Long after people sort of wrote that mine off, it continued to produce and profitably produce. And we used that that profit to effectively turn ourselves into a mid-tier company by going out and acquiring other mines and ultimately developing them and turning them into the new flagships for the company going forward. But again, it's very satisfying to look at the Mulatos operation sort of 16 years after we commenced production, and it still has a long life ahead of it.
And John, just to clarify, construction at La Yaqui Grande was completed in June, and from now until the end of the year, and I guess going into 2023, you're just going to continue to ramp up. When will you become or go into full production?
Well, it's a relatively rapid ramp up for a mine like that. It's in terms of the mining, the crushing, stacking, that goes very quickly. It's just a question of getting enough of your crushed material under leach to start yielding the ounces of production that we would recognize as being steady state. It's going to produce roughly 30 to 35,000 ounces a quarter, in that range. And we should be sort of running at that rate by first quarter of next year. But it's producing as we speak, and we'll just, as time goes on and more of the stacked ore gets under leach, we'll just see more and more of the ounces coming out. The grade it's amazing. I mean, right now we're mining something like 0.7 to 0.8 gram ton material out of the main Mulatos pit. La Yaqui Grande, which is sitting right at surface, so virtually no strip, very short hauls, dead easy to crush. It's all oxidized, so very fast and very high recovery rates, and it's grading 1.2 grams. So it's pretty much one of the most profitable heap leaches operating anywhere right now.
And John, maybe you can just tell us what the all-in sustaining costs will be at La Yaqui Grande.
So when we're finished ramping up, which we'll achieve by the first quarter of next year, all-in sustaining costs should be under $600 an ounce.
So John, you do have a lot going on at Island Gold with the Island Gold expansion and also at Mulatos. Why don't we discuss your balance sheet now and just determine your liquidity? How much cash do you have on hand, and how will you allocate the cash in this coming year?
Well, we have about 130 million US in cash on the balance sheet. We have roughly another 50 million or so in marketable securities. We're debt free. We don't have any debt at all. We're producing a pretty significant cash flow from operations. So even with the money we're putting into the Island Gold expansion, which will roughly be in the range of about 160 million to 175 million dollars a year for the next few years, we can essentially pay for that out of the cash flow that we generate from operations. In fact, most of that will come from that cash flow from Canadian operations. So the balance sheet's very healthy, and it's going to remain so. In fact, we will generate free cash flow over and above the money the capital that we're putting into Island Gold expansion. Will generate free cash flow next year, and it'll even be bigger the year after. So I don't see any risk to our very healthy balance sheet. And over and above that, we do have a credit facility of 500 million, which is sitting completely unallocated. So we're very healthy.
John, one of the interesting elements of Alamos Gold is your M&A strategy. In 2015, you completed an MOE with Areco Gold valued at $1.5 billion, through which you acquired the Young-Davidson mine. And then in 2017, you acquired Island Gold for $600 million, both of which were acquired at very challenging times in the cycle. And I guess you could argue we're in one of those times right now. Is this at a point, are we at a point in the cycle right now where you would consider acquiring other assets?
As much as I see attractive opportunities out there at the moment, we're not pursuing anything new for the time being. We figure with the work that we're doing on Island Gold, which is going to take a fair amount of capital from us between now and 2025, it seems like a more prudent approach to stay focused on our growth projects. Unlike 2015 and 2017, you referenced the deals we did to acquire both the Young-Davidson mine and the Island Gold mines. We only had one operating mine when we did those transactions. We were highly motivated to add new assets and to grow. But now with 3 operating mines, we already have the Lynn Lake project, which that's going to be a substantial producer for us as well. That's another Canadian producing asset that we'll have. That gives us some additional growth over and above what we have at the Island Gold project. So I don't think we're under the same pressure, and we're certainly not feeling the same sense of motivation to go out there and do deals as we did in past years. We've got a lot more on the go now. Having said all that, I'm a value player, and I've always been known as a value player. So if a very, very compelling opportunity comes our way, and it's on terms that are just too hard to resist, I suppose there's always that possibility. I never want to entirely rule it out. I just think that's really bad juju if you talk that way, because you always want to have the the open-mindedness to take advantage of a good deal if it happens to come your way. But all things being equal, if nothing does fall in our lap like that, I'm quite happy with our current rate of growth, quite happy with the capital that we're spending and what it's going to yield from Island Gold. So not feeling any pressure at all.
John, as we discussed earlier, we've been going through a very challenging time this year, especially when it comes to inflation. And you've been one of the few producers that have not raised your cost guidance. And I'm just curious how you and your team have accomplished this.
So we have been seeing inflation just like the rest of the industry, but so far it hasn't had a significant impact on us. And there's a number of reasons for that. We've seen costs for consumables, so cyanide, grinding media, and so on. But they tend to be a smaller component of our overall cost structure. We have lower exposure to diesel costs, which represents about 7% of our cost, but we have much of that hedged anyway. 2/3 of our underground production is connected to grid power, so that's been relatively stable. And we also have longer term contracts in place that have allowed us to keep our costs stable this year. We've also been helped by the weaker Canadian dollar, which is down from roughly 80 cents late last year. It's currently trading around 72, 73 cents. So all of these factors have weighed in to have us keep our cost guidance, our costs relatively flat, and that's how we've maintained stable cost guidance. Another contributing factor is the fact that we commenced production at La Yaqui Grande in June of this year. It's quite a bit lower cost than our main Mulatos pit, and this is going to be a significant contribution to lower costs coming out of our Mexican operations.
John, as we wrap up, what can investors expect in terms of news flow in the coming months and years from Alamos Gold?
Wow, there's one thing to talk about the coming months, quite another to talk about the coming years. But in terms of the balance of 2022, we're going to have a very strong finish to the year. We're going to see better production in Q3 and Q4 than we saw, let's say, in Q1 and Q2. That's holding together very, very well, and that's practically because in Q1 and Q2 we didn't have La Yaqui Grande yet. Now La Yaqui Grande is ramping up. It's adding a lot more low-cost ounces to our production profile. We intend to continue to do very well at Island Gold and Young-Davidson, and so on balance, we should see, better than a 10% jump in our production in the third quarter, and probably more like 15% jump in our production in the fourth quarter. So that'll give us a very strong finish in the near term. Beyond that, I would like to think you're going to see us continue to execute as we've always done on our construction projects. We've built quite a number of mines since I've been running the company. It was initially the Estrella pit of the Mulatos Mine. It was a small portion of what became the big Mulatos pit, which is about 3 times the size of the pit that we began with. And we developed adjacent pits. We developed a couple of underground deposits. We've been producing gold in every which way from that Mulatos operation over the last 16 years. Now we've brought on 2 great mines here in Canada. We've got a wonderful opportunity at Island Gold to really create a world-class deposit, and putting it all together, that's 600,000 ounces of production. Over and above that, we have Lynn Lake, which I think is a very promising deposit. We've been adding ounces to it since it was acquired. We acquired it on amazing terms. We paid $22 million. It was sitting with roughly 1.6 million ounces of gold. Now it's probably closer to 2.6 million ounces of gold, and we can envision that again, with greater than a 15-year mine life, and you know, adding more Canadian production. Again, it just means more and more of our net asset value is based in Canada. Right now, it's at just with what we have producing, our net asset value is 85% Canadian and 15% Mexico. Lynn Lake will tilt that a little further in that direction. So I think that's what to look forward to from Alamos. Mines that are located in solid jurisdictions that you could basically go to bed and not worry about you know, some crazy thing happening, a coup or an invasion. I don't know, name your thing. It's just been, the world's been a crazy place the last few years. The fact we've stayed focused on assets that are first quartile costs, and we're trying to climb to the top of that quartile. We want to be one of the lowest cost producers out there, and I think that that all adds up to a very profitable future for the company.
Well, it all sounds very promising, and that was a great overview and a great update on Alamos Gold. And I want to thank you for making the time today, John.
You're very welcome. It was a pleasure to be with you.